Good evening, everyone. So, evening update for you on the book and my thoughts on the market. I mean, listen, today is just yet another in a long line of extraordinary days. I mean, clearly, over the weekend, JD Vance and Trump walked back and softened up and doved up their language, which led into a big futures rally, which is kicked on this afternoon, mainly driven by the Broadcom OpenAI deal, which has obviously just reignited the retail frenzy in the AI stocks. When I look at the price action out there today, it's literally it's becoming more ridiculous every time. And when the market pulls back, especially in the fashion that it did on Friday so aggressively and washed everyone out, it's like pulling a rubber band back. So you get good news, or particularly even two bits of good news in one day, which of course was the geopolitical walk back and OpenAI Broadcom. Then it just, it's like a rubber band, right? It snaps back even harder. But the names that are moving today are hilarious. Like QuantumScape, QuantumScape had a really good update with the sort of real life use of their battery technology a couple of months ago, and they've been rallying and they've been part of the sort of short squeeze group. But today, I'll guarantee they're rallying because their name is QuantumScape, and they've got nothing to do with quantum at all. They're up 19%. It's just a massive retail-driven risk on. Look at the names that are ripping today. It's just there's 10 core names and 40 broader names that the retail crew. Rigetti. Let's just talk about Rigetti quickly, right? So I must have had 200 people ask me about this stock. I'd love to know how many of those people actually know what it is that they own, right? Rigetti has negative earnings growth of about 350%. It has negative revenue growth of about 450%. It has a market cap of $15 billion. And it has overall total revenue of $3 million. To say that it was ridiculously overvalued, I mean, that doesn't even come close to what this stock is. And this is just one example of the meme stocks that are essentially just being ripped higher on any excuse by the retail crowd. And the reason why the professionals are very wary of this market is there's a number of different reasons, but that's obviously one of them. I mean, also, I don't know if you guys have noticed, but gold is parabolic, right? Gold parabolic is not a great sign of what's going on out there. Essentially, people hedging against the devaluation of fiat currency and the state of the US balance sheet, amongst other things. But the bottom line is we've got an AI, robotics, quantum, nuclear frenzy, bubbly frenzy over here. And over here, we've got gold roofing it because some of the very critical macro concerns. So it's a very strange market. It makes me feel very uncomfortable every single day that ticks by. I'm perfectly happy to sit by and just watch most of this stuff taking place. In my book, in terms of small caps, I've got Illuma, of course, which is up 6% today. I've got Fubo. But I've moved my book back, predominantly into, as you know, those who are following me, into the high quality, beaten up stuff, things like PayPal, things like Pfizer, which is obviously very defensive. I feel very comfortable there. I feel very uncomfortable involved in anything that these retail crew are just roofing every single day. So it's just not right. Like it can continue, but it's getting more and more ridiculous, right? So anyway, the book stays the same. I took off the SPY S&P ETF short. So I've got the QQQ short, the Palantir short. And by the way, Palantir has been red most of the day. It's just gone green in a market that's ripping. So the retail crew and the cult that follow this stock have obviously moved their attention elsewhere, which is just very fickle and subjective, but it's interesting to note. So I stay short Palantir, I stay short QQQ, I stay short IONQ, which I covered on Friday and I sold again today. I mean, that's just going up. Let's not even bother talking about the valuation on that. And then of course I've got my European longs. So the bottom line is, the message for me this evening is today is not a day when professionals are doing very much beyond just sitting and watching and kind of just laughing to a degree about what's actually going on here, because it's some of it's rational, some of it's high quality companies, but a lot of it's just absolutely ridiculous. And quite frankly, we need more information on what exactly is going to happen here with US and China. Most likely, it's a lot of hot air, but we don't know yet. And then, of course, we've got lots of earnings, and then maybe we get some labor market data as well this week. Who knows? It's definitely going to be a loud, noisy week, probably with some more volatility. And I'm just going to sit here and watch the comedy show unfold.